Hello everyone, welcome to LBS IAS Academy. Today we are going to discuss economics MCQs based on previous year UPSC questions as well some practice questions. Through this series, we will cover important topics on economics for UPSC exam. So let's start our session. Our first question is, in view of the fact that kerosene is an inferior good in India, what are its implications? Options are, as households get richer, they consume less kerosene. Over time, there is a decline in quality of kerosene. Government needs to stop subsidies on kerosene. Select the correct answer using the codes given below. The answer to this question is option A. That is, statement 1 only is correct. An inferior good is a type of good whose demand declines when income rises. In other words, demand of inferior good is inversely related to the income of the consumer. For example, if the demand for jaggery decreases with an increase in income, then jaggery is an inferior good. That's why here, as household gets richer, they consume less kerosene is the correct option. So here, answer to this question is option A. Next is question number 2. Consider the following actions by the government. Cutting the tax rates, increasing government spending, abolishing the subsidies. In the context of economic recession, which of the above actions can be considered a part of fiscal stimulus package? The answer to this question is option A, that is statement 1 and 2 are correct. And statement 3 is incorrect. That is, cutting the tax rates and increasing the government spending are part of fiscal stimulus package in the context of economic recession. Fiscal stimulus is a government control measure that involves changing government spending and taxation to revive economy. That is, fiscal stimulus refers to increasing government consumption or lowering taxes. In a crisis, people and companies spend less. That is very much less. So the government fills that gap with the big spending measures of its own. So here answer to this question is cutting the taxes and increasing government spending. Don't confuse fiscal stimulus with monetary stimulus. Monetary stimulus is controlled by the central banks, refer to lowering interest rates or other ways of increasing the amount of money or credit. Next is question number 3. Brent index is associated with options are crude oil prices, copper future prices, gold future prices and shipping rate index. The answer to this question is option A, crude oil prices. Brent crude oil originates from oil fields in North Sea between the Shetland Islands and Norway. West Texas Intermediate is sourced from US oil fields. Both oils are relatively light, but Brent has a slightly higher API gravity, making WTI the lighter of the two. WTI with a lower sulfur content than Brent is considered as sweeter. Brent crude price is the international benchmark price used by OPEC, while WTI crude price is benchmark for US oil prices. Since India imports primarily from OPEC countries, Brent is the benchmark oil for oil prices in India. So your answer to this question is option A. Next is question number 4. If the average total cost is declining, then options are marginal cost must be less than average total cost must be constant, average fixed cost curve must be above the average variable cost curve, the marginal cost must be greater than the average total cost. The answer to this question is option A, that is the marginal cost must be less than the average cost. Here, marginal cost is the change in total cost when another unit is produced. Average cost is the total cost divided by total number of goods produced. When the average total cost declines, the marginal cost is less than the average cost. That is, when average cost declines, marginal cost is less than the average cost. When the average cost increases, marginal cost is greater than the average cost. That is, when average cost increases, marginal cost is greater than the average cost. When the average cost stays the same, marginal cost equals the average cost. Here you can see, when marginal cost decreases, average cost decreases. When marginal cost increases, average cost increases. So when total average cost decreases means marginal cost decreases and it is less than average total cost. So your answer to this question is option A. Next is question number 5. Which of the following statement is or are true? If increase in demand and supply are of equal magnitude, the price will remain unchanged, but the equilibrium quantity will increase. If increase in demand is of greater magnitude than increase in supply, both equilibrium price and equilibrium quantity will increase. If increase in supply is of greater magnitude than increase in demand, equilibrium price will fall, but equilibrium quantity will increase. Select the correct answer using the codes given below. The answer to this question is option D, that is statement 1, 2 and 3. All are correct here. Here you already know that higher the price of a good, fewer people will demand it. That is, when price increases, demand decreases. If demand and supply both increases, then equilibrium price will remain unchanged and equilibrium quantity will be increased because consumers wish to buy more and firms wish to supply more. So output will increase and the effect on price will depend on relative size of the two changes. Here, equal in magnitude. Both demand and supply equal in magnitude, so price will remain unchanged. In this case, you can see demand. Both demand and supply increases. That means price will depend on the magnitude of these two quantities. Here, equal quantities of magnitude. So, price remains unchanged. Here, consumers want to buy more and suppliers want to sell more. That means equilibrium quantity increases. So, this is the first case. So, first statement is true. In the case of second statement, if increase in demand is greater than increase in supply, then price will increase and equilibrium quantity will also increase because as price rises, producers are willing to sell more, thereby increasing output. In this case, demand is greater than supply. That is, supply is less, demand is more. That means when demand is higher, price will rise. When demand is higher, price will rise. That means equilibrium quantity will increase because suppliers want to sell more. Because demand is higher, so suppliers want to sell more. That means equilibrium quantity rises. So second statement is also true. In the case of third statement, if increase in supply is of greater than increase in demand, then price will fall, but equilibrium quantity will be increased because excess supply causes the price to fall, but quantity demanded to increase. In the third statement, you can see supply is greater than demand. That is, more supply means more product available in the market. When more product available in the market, that means price will become decreasing. Price will decreases. When more products are available in the market, price will decrease. That means equilibrium quantity increases because people want more product. Because the price is decreasing, people want more product. That means equilibrium quantity increases. So here all the statements are correct. Next is question number 6. Which of the following has been peculiar or noteworthy to the Indian economic growth story? Service sector has always grown at slower rate than any other sector of the economy. That is incorrect. Agriculture sector has always employed largest number of workers in the economy. That is correct. Service sector contributes more to the GDP than agriculture and manufacturing, even though India is not an industrially developed country. That is also correct. Select the correct answer using the codes given below. The answer to this question is option B. Statement 2 and 3 are correct, but statement 1 is incorrect. Agriculture continues to be the prime pulse of Indian economy and is at the core of socio-economic development of the country. It accounts for around 19% of the GDP and about 2/3 of the population is dependent on the sector. The Indian agriculture sector can also be termed as the largest employment sector in the country. Around 54.6% of the total Indian population is employed in agriculture as compared to other nations where only about 2 to 6% of the population is employed in agriculture. Agriculture in India plays an important role in international trade, import and export activities. So, statement 2 is correct here. India's dominant service sector expanded at its fastest pace in 13 years last month, as demand increased significantly despite elevated inflationary pressures. The services sector is the most dominant sector of Indian economy in terms of GDP. It has also attracted significant foreign investment and is a major contributor to India's exports. It also provides employment to around 30% of the India's workforce. As a country develops, it undergoes structural change. Usually with development, the share of agriculture declines and the share of industry becomes dominant. At higher levels of development, service sector contributes more to the GDP than the other two sectors. But in the case of India, service sector has grown much faster compared to other sectors of the economy. Traditionally, service sector growth is propelled by the manufacturing sector. But in India, service has overtaken manufacturing in terms of GDP, even though manufacturing has not been fully developed in India. The service sector boomed when business were outsourced from foreign countries to India for communication, advertisement, computer service and banking. Because of this high demand, there was high growth in the service sector. The service sector started to grow in mid-1980s, but the growth accelerated after the economic reforms in 1991. So, statement 3 is correct. And statement 1 is incorrect. Next is question number 7. An economy heats up due to options are demand deficit, excess supply, high liquidity, infusion. Select the correct answer using the codes given below. Here answer to this question is option C, that is statement 3. That is an economy heats up due to high liquidity infusion. There are two main signs of an overheating economy. That is rising rates of inflation and an unemployment rate that is below the normal rate for an economy. Overheating of an economy occurs when its productive capacity is unable to keep pace with growing aggregate demand, leading to inflation triggered by increased consumer wealth. When there is excess demand and low supply, high consumption and low savings can lead to a situation where there is a shortage of investable capital. The economy is unable to supply demanded goods and prices start increases. Liquidity infusion refers to the injection of cash or other liquid assets into an entity, such as a company or a market, to increase its ability to meet financial obligations and stabilize its operations. It can be done by government, central banks or other financial institutions. The goal of liquidity infusion is to provide short-term support to the entity and to avoid or mitigate a financial crisis. So here answer to this question is option C. Next is question number 8. Consider the following statements. Private remittances is the net outcome of money which inflows and outflows on account of private transfers by internationals working outside of India and foreign nationals working in India. That is correct. On this front, India has always been a gainer. That is also correct. Which of these statements are not correct? Here answer to this question is option D, because both the statements are correct here. Remittances were a source of comfort for India's balance of payment during pandemic. Remittances are money transfers that migrants send to their families and friends in their home countries. So statement 1 is correct. On this front, India has always been a gainer. They are an important source of income and foreign exchange for many developing countries, especially those in South Asia. Remittances can help reduce poverty, improve living standards, support education and healthcare, and stimulate economic activity. According to the World Bank latest Migration and Development Brief, India, which saw a record high of $111 billion in remittances in 2022 is expected to experience minimal growth of just 0.2% in remittances inflows in 2023. That is, in 2022, this inflow was high. In 2023, there is only 0.2% growth. That is decreasing, inflows decreasing. This decrease is due to the reasons for the decrease is slower growth in OECD economies, especially in the high-tech sector, and lower demand for migrants in the GCC countries. And overall remittance growth is projected to be slower globally, with Latin America and Caribbean showing the highest growth while South Asia lags behind. So here, even if the growth in 2023 is slower, India has always been a gainer in remittances. So, the answer to this question is option D because both the statements are correct. Next is question number 9. Consider the following statements. Gross national product is the GDP of a country added with its income from abroad. That is correct. GNP is always lower than its GDP. That is incorrect. In India's case, GNP is always higher than its GDP. That is also incorrect. Which of these statements are correct? Here, answer to this question is option A. That is statement 1 only is correct. GNP is the value of all final goods and services produced by residents of a country in a financial year. While calculating GNP, income of foreign nationals in a country is excluded, but income of its people who are living outside of that country is included. The value of GNP is calculated on the basis of GDP also. That is, GNP of India equal to GDP of India plus income of Indian people living abroad minus income of foreign nationals living in India. GNP takes into account the investment made by the business and residents of the country living both inside and outside of the country. It also takes into account the value of the products produced by the industries of the domestic origin. GNP does not take into consideration the income earned by the foreign nationals in the country or any products produced by the foreign company in the manufacturing units in the country. So, statement 1 is correct. Gross national product is mostly lower than the gross domestic product, but it is not always lower than its GDP because it can be higher. So, statement 2 is incorrect. If the income earned by domestic firms in overseas countries exceeds the income earned by foreign firms within the country, only then GNP is higher than GDP. That's why statement 2 is incorrect. And statement 3, in India's case, GNP is lower. So, statement 3 is also incorrect. So, your answer to this question is option A. Next is question number 10. Demand for a commodity refers to options are desire for that commodity, need for that commodity, quantity demanded of that commodity, quantity demanded at certain price during any particular period of time. And your answer to this question is option D. Demand for a commodity refers to the quantity of commodity demanded at certain price during any particular period of time. Demand is calculated as the price of the consumers are willing to pay for the product or service. So, your answer to this question is option D.